All right, guys, welcome back. We just closed a $14,000 trade on gold. We closed $4,000 right here and the remaining $10,000 of the position right up here. So I want to make a quick video just showcasing the market structure bias and the macro bias that led me to take this trade. This was the most free $14,000, almost $1,000 a day being made with this, considering I was in the trade for 16 days total. So I haven't really taken any other trades beside this, and this will probably be the last trade of the year for me. I really don't trade much through December. I'm usually content just holding and waiting, and this trade could have been held a lot longer, but I'll get into the reasonings of why I actually chose to take the full take profit at this level. So I've been pretty transparent with you guys about all the trades that I've taken. I've made a breakdown on every single one of these trades, and it's going to be no different for this one. So coming into the mix with the market structure, which I always start with, is obviously the big fall off that we had on gold was, I think, just an overreaction, and this is what led me to take some smaller intra-month moves. I would say, like, these are only spanning a couple days at most, so this one is by far the longest trade that I've taken in front of you guys as well. With this huge fall off, I am going to be currently looking for gold longs. From a basic market structure perspective, we had this low here, which was protected. We had this high right here, which is going to be our new higher high and our higher low. So obviously I'm looking to make a higher high as my TP. Why is this so? Why is this not considered a break of structure? Because if we're coming down like this, we have a lower low, lower high, lower low. This could just be a lower high that we could be continuing to the downside from. Now for me, the biggest confluence was actually this high right here being taken out. That shows me that we are going to be going bullish on the higher time frame. So I'm going to be expecting some sort of higher high being made right here, a higher low and a higher high. Now I got that wrong, as you can see right here. I already made a trade breakdown on this. You know, we hit it with some force, that sucks, but we put in the higher low right here. So I am assuming, and that is a big word in trading, assuming, I am assuming we're going to be creating a higher high from this point on. Now coming into this current trade, I already did make a trade breakdown on this, and I'm just more so making this to talk about how I took the profits on this, why I took them, and where I expect gold to go from here. So if you guys remember correctly, we put in this higher low, we had this high come up here, respect these lows, and continue up. And I could have just taken the break and retest from here, and we could have just been on our way from there, but I wasn't 100% confident in that trade. So if we hop down to the lower time frame, you can see that I actually could have taken the break and retest right off this high right here, which I didn't end up doing the first time we did it because there wasn't enough volume here. So let me just zoom in a lot more so you guys can see this. In particular, we ended up just wicking this, like we didn't even break above with good force. So I would have taken the retest right here and held to the highs from there, but I didn't even end up doing that because I didn't like that wick rejection we got off it. So instead I waited to see if we respected these lows, which we did, and then I waited for a good break of this area of interest and another retest of it with good force. And as you can see in this Asia session, that is exactly what happened. We had a good break, held above it, came back for the retest, and that triggered the trade for me. So like I always say with this kind of trading style, patience is so key, and patience pays, because with something like this, I wasn't forced to take a position. I wasn't chasing after the move. I was very patient. I waited for the market to tell me, hey, yes, we are ready for the move. Are you confident to take this move? 100%, you know, let's go for it. So very happy with how that played out. And initially I was targeting all-time highs, and I still am very bullish on gold. I still think, you know, we have a lot of room to the upside, a lot of unmitigated highs from the left here, where I do believe we will just continue to the upside as such. But for me, I was getting a little bit anxious with it being the end of the year. You know, personally, the macro bias on this was very strong, and I've said it so many times on my other socials that this rate cut decision from FOMC, which happened yesterday, December the 10th, is what would carry this trade to its TP. And that is exactly what happened. You know, I was very spot on with that. Absolutely surgical take profit level right here that I had. You know, I'm making this video very prematurely before we see where this actually runs. But, you know, when we have something like this, I do believe that this is already being priced in. And that's what I was saying about this initial move that we had to the upside. There was like an 83% chance at this point that the Fed was going to cut rates. And so I believe that was kind of the early adoption of that bias. And then obviously we came back and we just kept ranging for a little bit, which sucked being in this trade. You know, we're literally paying so much money in swap fees the whole time. But nonetheless, you know, FOMC hit, and, you know, we saw this massive push up the day after and right to our take profit level. So, you know, I am very accurate at that stuff, but it is one of those things where you can be very accurate and you can be correct, but if you're right at the wrong time, you're still just wrong. So thankfully, you know, I did want a little bit more of a buffer before coming into FOMC, just in case we did dip lower before going to TP. Apparently that wasn't needed. We shot up from FOMC, we reversed over through Asia session, and then continued to the upside and to my take profit level. Now, in terms of a take profit level, these were just some unmitigated highs to the left, as you can see. This was just a good anchor point for me to frame around the trade. It was just this wick from the left, and it lined up perfectly with the trade position here. As you can see, we literally wicked it and pushed off of it, and now we're going to continue higher. As I said before, I really did want to hold these to all-time highs. I have been in this trade for half a month now, so it is one of those things where I would like to kind of take a step back, relax, reassess, rebuild a macro bias, and have some fresh market structure. Personally, this is a great area of interest, and I was saying in my last video where we could just take a break and retest off of here if the macro bias allows for that. I personally would like to see maybe some more market structure kind of push up, trail through like this, make another good few areas of interest, punch in that higher low, break above the higher high, retest it, and then take it above, and my entry would be around this area right here. Trying to go back to the upside. So that is my plan for gold. Not much else going on here. Obviously, it's December, so I really don't even want to be in the markets. As you can see, for the month of December, we've pretty much just been ranging. Like, I don't even know how, day traders do this. Some of my close friends who are day traders, these guys are absolutely on it, and it is just so stressful watching them, navigate all these wicks and stuff, and, closing $14,000 in 16 days without really doing much besides plotting that entry and then leaving it for half a month. There's nothing better to me than being able to swing trade like this and take your time, let the market show you what it wants to do, and exactly the direction that we're going in. And to me, I respect the day traders a lot, but this is just so much easier. It's so much less stress. I just enjoy this so much more. Yeah, nothing really going crazy on this. We had the market structure showing us we're bullish. The macro bias was there. Beyond, the FOMC rate cut repricing, obviously we do have a bit of the rate cut expectations were growing, and, that softens the dollar and, removes the major headwind of how the indices and stuff were performing, and obviously that feeds into gold. There isn't a whole lot of geopolitical tensions going on currently. I know that was a big thing. Like, we do have some other stuff going on that are pumping the indices right now, especially the chips from Nvidia being sold to China. I think that's huge for indices, but those aren't performing in any way that I would really want to get into with price action right now. So I'm very happy to stick to gold, and you know what, this might be the last trade breakdown we make for the year, which is very unfortunate. It's very sad to hear that the trading year is over. We had such a great trading year. I'm still going to be making some YouTube videos throughout this time, through the month of December. I'll probably take a break for Christmas, but overall, that's going to be really it for this video. Just a quick breakdown and showing, this trade. So I just want to make a quick video showcasing that we did take profit here, anyone that's following along, and we are out of this trade. We have no active positions as of right now, and I don't think we will be taking any more positions for the rest of the year. So that being said, if you guys want to see anything specifically about trading, I'm happy to make videos on it, especially while I'm not going to be actively trading the markets. In the meantime, I probably will start making some videos about trading options, specifically selling cash secured puts, because I made one video on that and I don't think that really gained the traction to, to actually get people to recognize how amazing, playing options like that is. Aside from your day trading, it is probably the equivalent of the way I swing trade, but just on an options basis, and it is even more consistent than, the swing trading aspect. So I'll make a couple videos on that while we are waiting for January to come back and get back into the trading year. But for now, let me know what you guys want to see, and we'll see you guys in the next one. If you enjoyed this video or learned something, make sure to leave a like, subscribe, comment of anything you want to see or hear, or any comments you have in the first place. But with that, we'll see you guys in the next one.